Money is like a drug. Once you get used to it, you can't live without it. But what if the drug dealer isn't your government, your boss, or even the market, but a shadowy institution that claims to keep you safe? That's the paradox of central banks. They present themselves as guardians of stability, the responsible adults in the room. Their job, they say, is to prevent crises, tame inflation, and keep economies running smoothly. But behind the curtain, they are the ones controlling the dosage. They decide how much money flows through the veins of the system. Too little, and the economy crashes. Too much, and inflation burns everything down. The first hit comes quietly. A small injection of credit here, a gentle lowering of rates there, just enough to soothe the pain of a recession or a war. And people cheer. Businesses recover. Governments breathe easier. Everyone feels the rush. But just like with any addictive substance, the body adjusts. What felt like relief becomes the new baseline, and the next time the pain returns, a bigger dose is required. This is the real power of central banks. They are both the doctor prescribing the cure and the dealer creating the dependency. Their tools, printing money, manipulating interest rates, flooding markets with liquidity, always promise short-term relief. But every fix makes withdrawal harder, and every rescue sets the stage for the next crisis. The addiction isn't just financial, it's psychological. Citizens, politicians, and entire nations come to believe there is no alternative. The central bank will always step in. It must step in. And that belief gives it power greater than kings, presidents, or parliaments. The question is, when the dealer controls the drug, who really controls the world? Every addiction begins with a promise. In the late 1600s, England was drowning in war debts. The king needed money, fast. But his coffers were empty, and his credit was exhausted. So he turned to a new kind of power, the bankers of London. In 1694, a deal was struck. Wealthy merchants and financiers would lend the crown over £1 million to fund its wars. In exchange, they were granted the right to create a brand new institution, the Bank of England. On the surface, it looked like a patriotic solution, but beneath it was something far more radical, a machine that could turn promises into money. Here's how the alchemy worked. For centuries, money had meant gold and silver, tangible, weighty, trusted. But the bank began issuing notes, paper claims on gold that could circulate like coins. At first, each note was backed by precious metal locked away in a vault. But as confidence grew, the temptation became irresistible. More notes were printed than gold reserves could cover. The magic trick was belief. As long as people trusted the paper, it worked. Governments quickly realized they had stumbled onto the perfect fix. Why raise taxes? Why beg for gold, when paper promises could conjure wealth instantly? Wars could be fought, projects funded, debts delayed. It was intoxicating. The addiction had begun. Once a king, or later a parliament, tasted the rush of easy credit, they couldn't quit. Every crisis, every shortfall, every war became another excuse for more paper. And the bankers, like skilled alchemists, kept the flow steady. Gold had limits. Paper did not. And that shift, from metal to promises, changed the nature of money forever. The drug was now in the bloodstream. Withdrawal was no longer an option. In 1910, a small group of men boarded a private train in New Jersey. They traveled under false names, told their families they were going on a hunting trip, and vanished into the woods of Georgia. Their destination? Jekyll Island, a secluded resort for America's richest families. Their mission? Nothing less than to redesign the nation's entire financial system. The men were not ordinary bankers. They represented the titans of Wall Street, J.P. Morgan, Rockefeller interests, and the nation's most powerful financiers. With them were a handful of influential politicians. For days, behind closed doors, they drafted a plan that would later be sold to the public as the Federal Reserve Act. Officially, the Fed was about stability. ending bank runs, smoothing out panics, and keeping the economy safe. But the reality was something else. For the first time, private bankers gained the legal power to create money on a national scale, backed by the authority of the government. It was a cartel disguised as a reform. Think about it. The same institutions that profited from lending now had influence over the supply of money itself. They weren't just playing the game. They were writing the rules. And the secrecy of Jekyll Island tells you everything you need to know. If the public had known that a handful of bankers were designing America as central bank in secret, outrage would have killed it instantly. But the deal went through. In 1913, the Federal Reserve was born, and with it, America took its first real injection of central bank money. The high was immediate. Credit expanded, markets grew, confidence soared. But just like every first hit, it created a dependency that would only deepen with time. The dealer was now in place. The question was how much the nation would need to keep coming back for more. Addictions don't show their true power in good times. They reveal themselves in crises. And for central banks, the crisis is where their influence becomes absolute. Take the Great Depression. In the 1930s, banks collapsed, businesses failed, and unemployment soared. The Federal Reserve, created just 2 decades earlier, was suddenly the only player with the tools to pump life back into the economy. It lowered rates, expanded credit, and put the government on a path toward permanent dependence. From that moment, America learned a dangerous lesson. When disaster strikes, the Fed is the first number you call. Fast forward to 2008. The global financial system was on the brink of collapse. Lehman Brothers failed, markets froze, and panic spread worldwide. But this time, the Fed didn't just lower rates, it unleashed trillions. Money was conjured at a scale never seen before, handed to banks, corporations, and markets. The fix worked, temporarily. The economy stabilized. But the dosage was massive, and withdrawal became unthinkable. From then on, Wall Street knew risks could be taken without fear. The dealer would always deliver. Then came 2020. In just a few weeks, central banks printed more liquidity than in the entire 2008 crisis. Trillions poured into markets, propping up businesses, governments, and consumers. Stocks soared even as the world was locked down. The disconnect was staggering. Real economies were frozen, but the drug of money kept asset prices high. Every crisis justifies a bigger hit. Every hit makes the next crisis harder to survive without another injection. What began as emergency medicine has turned into a permanent supply line. And like any addict, the system now craves larger and larger doses just to feel normal. So the question is, how much longer can the body take it before the cure becomes the killer? Here's the dangerous question. Who actually controls money? Is it elected governments, the people's representatives, or unelected bankers working behind closed doors? Central banks insist they are independent. They claim freedom from political pressure allows them to make tough, rational decisions for the good of the economy. But independence is a myth. Because when a crisis hits, governments beg for rescue, and central bankers answer. And once the money starts flowing, it never really stops. Consider what independence really means. Politicians may raise taxes or cut spending, but central banks can create money with a keystroke. They decide interest rates, they decide liquidity, they decide how much your savings are worth in real terms. You don't vote for them, you don't elect them, yet their decisions shape every paycheck, every mortgage, every retirement fund. And who benefits from this arrangement? Not the ordinary citizen. Inflation quietly eats wages and savings. Debts pile up. Prices rise faster than incomes. The public pays the cost of the addiction. Meanwhile, those closest to the money spigot, the elites who hold assets, gain the most. Stocks, real estate, and commodities inflate in value. The system rewards those already wealthy enough to own assets while punishing those who rely only on cash. It's like a rigged rehab clinic. The people are forced to pay for treatment that never ends, while the elites own the clinic itself, profiting from every new dose of monetary relief. The myth of independence hides a harsher reality. Central banks are not neutral referees. They are power centers in their own right, half guardian, half dealer, protecting the system while ensuring dependence. So ask again, who controls the money? The answer reveals who truly controls the world. Every addict eventually asks, can I quit? Can I walk away from the thing that controls me? Nations are no different. For centuries, people have searched for ways to escape the grip of central banks. Some turn back to gold, the ancient anchor of money. Others put faith in new alternatives: Bitcoin, decentralized finance, digital assets that promise freedom from manipulation. But breaking free is never easy. Gold ties money to scarcity, but it limits governments' ability to spend in emergencies. Bitcoin offers independence, but it swings violently in value, and most people still measure it in dollars. Every alternative comes with trade-offs, and the system's pull remains strong. That's the paradox of monetary detox. Withdrawal is painful. History proves it. When Rome debased its silver coins, recovery never came. When Germany abandoned its paper marks in the 1920s, it took years of suffering to rebuild. When Zimbabwe's dollar collapsed, people were left scrambling for foreign currencies just to survive. Each attempt to reset the system came with chaos, unrest, and hardship. Today, the challenge is even greater. The world is addicted on a global scale. Every major economy runs on fiat money, paper backed only by trust, managed by central banks. There is no single empire to fall, no local system to reset. If withdrawal comes, it will be worldwide. So, can we ever break free? Maybe. But history suggests the cure is as dangerous as the disease. What is certain is this: once you understand money's addiction, you'll see the world's most powerful institution isn't an army or a government. It is the central bank. And the dealer still controls the dose,